Elon Musk, betting against him is a sure way to lose money on a long-term basis.
I think you have to, at this point, the trend is to fade any rally.
It's not perfect, but we don't think it's as bad as people think it is.
And you would not want to be on the wrong side of Tesla when they're now applying that type of technology to on-the-road driving.
All that and more. So let's get to it. Last day of trading for the week and the quarter. In the pre-market, Tesla is down a little bit, almost 0.1%, sitting at 179.69. For the week, Tesla is up a little over 0.5%. For the month, down almost 10%. Year to date, Tesla is down just a little under 30%. I may place a few zero-day options today. Depending on where we're at the opening bell, will determine which direction I decide to go.
How about Tesla, which is a name that's down about 30% this year? We know EV demand has been a little uneven, let's say, but your thoughts? Is it still not a great name?
Yeah, Nicole, I mean, this is something you don't want to bet against on the long run. Elon Musk, betting against him is a sure way to lose money on a long-term basis.
You're damn right.
However, as you mentioned, Nicole, that these EV sales are definitely dropping, and we're also getting a big increase in competition. We see where the company like China is starting to build factories in Eastern Europe. So they're want to move into Europe. They're also talking about moving into Mexico. So, these prices are going to start coming down. It's going to be hard to keep those margins. Again, this is another stock I think we'll probably see some more downside. It's bouncing a little bit here, but I think it's more just bouncing off of on a technical level, but from an overbought level. I'm sorry, from an oversold level. And then I think, again, these fundamental issues that you mentioned will take it a little bit lower. That and the fact that Elon Musk is not the favorite guy around Washington, D.C. right now, and he may feel some more pressure from that area in this election year. But again, on a long-term basis, any more further pullback in either one of these names, any more material pullback, I think is going to present great buying opportunities for the long term.
And that's what I'm in it for, ladies and gentlemen, the long term. In the meantime, I will try to make as much money as I can off of this negative sentiment around EVs, Tesla, and Elon Musk in general. But as much as the mainstream finance media mentions a EV slowdown or the competition is coming, it just further reinforces my conviction as I know these things to be ridiculous. EVs are the future of the automobile industry. Electrification coupled with automation. And as far as the competition front, there's only been one competitor since the inception of Tesla the company. And that, my friends, is the internal combustion engine. The mission of Tesla is to accelerate the transition to a sustainable energy economy. To do that, one of the pillars would be supplanting the internal combustion engine for electric vehicles. Obviously easier said than done, just as Ford, GM, or any other legacy auto manufacturer. So in order to do that, you have to produce a product that is so much better than what people are using right now that it leaves no doubt as to where the future of the industry is headed. Next on the docket is seamless automation.
It's clearly the worst chart among the giants, Scott, on the longer term. How do we deal with that?
I have a range-bound type of trade here with a little bit of a bias to the downside. We have recovered off of those lows. The RSI was, I think the lowest it had ever been, and some buying came in, and we saw a little bit of a run up. But I think overall, fundamentally, technically, and then you keep seeing these, price cuts coming out, I think the overall bearishness nature still holds here. And I think you have to, at this point, the trend is to fade any rally. So what I'm doing, especially with the holiday this Friday and no trade, so sellers of premium option sellers are going to love this Friday because it's an extra day of theta decay. I'm selling an iron condor for next week, again, with a little bit bearish bias to it. So I'm selling the 167.5, 162.5 put spread. I'm selling the 182.5, 187.5 call spread. Selling them both, looking for the stock to really remain in this range that you guys were just talking about, just over the next week. So I can do that. My break evens are 165 on the downside, 185 on the upside. And I get to collect a lot of premium for that, Oliver, $2.50, which is also what my risk is in case Tesla does make an outsized move there.
Woo-wee! Now I know there's a lot of jargon in there and a lot of people might not understand what that means. He's basically betting against the volatility, which is about as dangerous as anything I've ever done. If there's one thing I have noticed about my tenure of trading and investing in Tesla is that volatility is the constant. But there are some rare consolidation periods, and leading into the Q1 earnings call, I guess that's as good a bet as any. Ensuring that the stock stays between 165 and 185, I suppose that works. Me? I'm an all or nothing guy. I buy and sell puts, I buy and sell calls. I rarely like to intermingle or limit my opportunity because I know how much Tesla can move. But to each his own. Everyone's got their own particular risk tolerance. The main key takeaway is the market remains fairly bearish on this negative chart of TSLA. And with a potential lackluster Q1 earnings call, I'm not seeing a whole lot of upside from the stock market. But on the other hand, I am pounding the table on Tesla FSD. There is so much deferred revenue to be unlocked with that technology. And if it shows up in the financials on an earnings report, let's just say the stock will take off.
We have seen a lot of numbers get cut. Redburn today suggested maybe flat to negative deliveries this year. Why can't it get suppressed below 170?
We went through multiple geographies during the quarter, tried to discern how bad demand was, how good demand was, and clearly things aren't perfect for Tesla. There's some weakness in China in March. But I think the one thing people have to appreciate is that much of the potential weakness in deliveries this quarter has to do with supply constraints. They've had some issues with making a new updated Model 3 in Fremont. And don't forget that the Cybertruck isn't fully ramped yet. We assume that maybe they'll make 5,000 and deliver 5,000 in Q1. And they have the capacity to deliver over 60,000 a quarter. So things aren't that bad. And actually, if you add those things back, it should result in year-over-year growth. So it's not perfect, but we don't think it's as bad as people think it is.
Are you a fan of the theory, and some have written this, that the price cuts have actually worked a bit?
Interesting question. They cut prices a lot last year, and clearly it helped volumes, and it's helping this year. But what's interesting, what we put in our note today, is that the price cuts haven't been there so far this quarter. I mean, maybe a little bit here in China and in South Korea, but overwhelmingly, the tone has shifted dramatically in price cuts. This quarter in the US, they actually increased prices 4 times, with another one due on April 1st. And some people have speculated that maybe to induce demand, to get people to hurry to the website and buy a car today. But I think it's more than that. I think hopefully we'll see that result in margin improvement throughout 2024. But also it may indicate that things might not be as bad as people think.
And people definitely think things are bad. From the growth all the way to the margin story, it's chaos. As far as the growth story, we're not even in the first inning. Tesla is ramping back up the refreshed Model 3, the Cybertruck. We have the next generation vehicle on the way. All of these things, plus the future product roadmap, will impose certain challenges. May slow down production here, encounter a supply chain problem there, who knows? But Tesla will navigate it the best that they can.
Let's go to Tesla. Wall Street continuing to cut price targets on the stock. Fresh round of warnings on the first quarter deliveries numbers. EV manufacturer, one of the very few underperformers among big tech stocks so far this year, down about 27%. Jerry, your trade.
Tesla, I would put in the same category as Apple, the 2 worst performers of last year's Mag 7. And they're actually even been kicked out.
Good riddance. Tesla is more like a Lone Ranger or a Han Solo, if you will.
When you think about it, both of these stocks have kept away from investors their real strategy and what they're doing in AI. If we knew more about them, it would be easy to conclude that both should stay as underperformers.
Well, I definitely know what Tesla has to do with AI. It's full self-driving, Optimus, and any other way that it'll help their platform.
But think about Tesla for a minute. The expectations now for deliveries have been cut. China is not a surprise on the upside anymore. It's a big negative concern. Stocks pulled in. They just raised prices, so that market might be stable. But more importantly, they're most likely going to have a very scary, on the upside, announcement at some point on their AI application, and it'll be wrapped around this self-driving aspect that they've developed.
What?
We don't know if it's going to come soon, but we wouldn't be we would very much expect something here in the next maybe even 3 weeks, just hinting at where they could go. And you would not want to be on the wrong side of Tesla when they're now applying that type of technology to on-the-road driving.
So you think you would say buy this here in light of the fact that you think something's coming big on AI?
From a tactical perspective, I would let the quarter come in the next few weeks, let them report, let them give you potentially more bad news, and take that as my entry point. We don't own it right now. We're looking at it very closely. And if we see any more weakness in it, given the upside that they have, that would be a great time to start buying. So I'm a hold.
Okay.
We're going to your earnings and buy regardless.
Buy regardless. That is exactly where I'm at. Waiting for the earnings report, potentially bad news. And if there isn't any bad news, I'm hopping on it regardless. If there is bad news, I'll give it a couple of days and then pounce on it then. But I'm holding my cash reserves until after they report their earnings. I know where Tesla's going to be in a decade's time, but you gotta pick and choose your battles. And I believe this is going to be one of those opportunities that you probably shouldn't miss. In conclusion, there's no telling which direction Tesla stock will go. It has room to slide. Does it have room to skyrocket? With Tesla's volatility, there is plenty of money to be made. But one thing's for certain, Tesla's long-term potential is rarely questioned. No one knows when Tesla will recover, but it's pretty safe to say that you want to be on the right side of it when it does. That's all I got for you today. Be easy. Peace.